For those of you that don't know, we have a timer in front of us that is green when we're good and red when we're about to get into trouble. So if I start speeding up, it's because we're in the red zone. I'm about the 20th panelist today, and actually, the more I hear from the other panelists, both this morning and this afternoon, it makes me think, first of all, we're talking about financing of green shipping solutions, but is there a question mark missing at the end of that? So in two respects. Number one, is the financing even available at the moment? And also, are the assets to be financed available in their current state? And as the more I hear today, the more I'm not entirely sure of either of those answers, to be honest. I've got a bit more time than the others because Tien this morning has covered a lot of the slides that I'm covering. So you've got two lawyers talking about the same thing today. So what I wanted to cover today is looking at this topic from both the regulatory, which has been covered a lot, but also the documentary and structure angle. And I will touch on both conventional and Islamic structures briefly. Enough about me. Just to mention that we published this report a couple of years ago where we took soundings from the industry about how the industry felt their sustainability journey was going. This is still available on our website. But what I would say, and the reason it's relevant to this topic, is because one of the 5 key findings was that ship owners were less concerned about how they were going to pay for the new technology, but more concerned about choosing the right technology, and that's both to do with the availability of the tech itself, but also the regulatory framework around it. And actually, we go back to my point at the beginning. Financing is considered generally available, but is it generally available in the right region? Obviously, we're in the Middle East region here, and I would argue that the funding parameters in this region are very different to elsewhere, where perhaps some of the regulatory aspects are more prevalent. So that's the broader context in which I will speak. We've covered Poseidon principles to death today, so I don't intend to go into any great detail, but just as a reminder, there are no regional or Islamic financiers that are currently signatory to the Poseidon principles. How many lawyers can talk about...
Why do you think it's not there, since you're going to skip this? Why is it not there? Watch the time.
Yeah, pause the time for me for this one. I think it's in part to do with different priorities of the banks themselves, but also different regulatory aspects that banks in this region of the world have. We're not... a lot of the banks that lend in this market do it on a more corporate basis or relationship basis rather than looking at it as a pure asset financing play. So actually, I don't think some of the concerns that banks have, say, in Europe are the same, and how they structure the deals or approach the deals are the same. I'm not going to cover the loan covenant because how many lawyers do you need to do that in one day? So we can move on from that pretty quickly. The other thing I was going to mention is in parallel with Poseidon, you also have this Net Zero Banking Alliance. It's another group of bankers that come together to kind of work towards net zero. There are 2 regional banks that are signatories to this. That's ADCB, Abu Dhabi Commercial Bank, and First Abu Dhabi. But again, no Islamic finance institutions and no lessors. There are some global banks that do have Islamic windows. Those are conventional banks that can offer Sharia products. Some of those are signatories, but again, the uptake from this region of the world is pretty light for broadly the same reasons. We've spoken about green loans and sustainability-linked finance today, so I will just touch on this briefly before going into Islamic. Obviously, the green loans themselves have to be for a particular product or project or asset that has a green element to it. I would question how many assets in the shipping market in their current form would actually qualify as a proper green asset to be funded. And that's in part why, in the maritime sector and generally speaking, sustainability-linked finance has become more prevalent, I guess, until those assets are more fully available or the right fuels are available, for example. And the sustainability-linked finance we've discussed again at length today, that's more to do with the financial metrics and incentives that the borrowers would have. This slide is a good summary of the 5 components of it, which I don't propose to go to in any great detail. The one thing I would say is that the verification is important, to have independent verification, because as with everything in life, if you mark your own homework, it actually reduces the reliance that other people can place on that. One other point to make is that this isn't just linked to the E part of ESG. Whilst most of the deals that are done have environmental metrics that are tested and the loan margins are reduced or increased as a result of that, you can also do this for social and governance aspects as well. So there are examples in the market of metrics being KPIs linked not only to environmental performance of the fleet, but also to the number of women holding leadership roles within an organisation. And that's an indication of the margin adjustment that would result from that. FYI, I'm in the red zone already. There are some success stories in the region for both green and sustainability-linked loans, but what you'll notice from the names on the screen is that they are really at the top end of the market, sort of the quasi-governmental or state-owned company. And of course, as others have mentioned on this panel, there's a whole raft of an industry here that needs financing that doesn't operate at this level. And that's really where more of the difficulty lies in raising green or sustainability-linked finance. Just to touch on Islamic finance, we have seen examples in the shipping industry and more broadly around different types of products in the market. Most recently Sukuk, which I'll touch on in the last minute or so. But this slide just gives you an idea, this is from PwC, of where there's an overlap between ESG principles and Islamic finance principles in general. Both are really predicated on the avoidance of harm and social impact that your product or finance can offer. So there is an easy overlap, and you would have thought it's a very easy way for Islamic finance to tick the box to get involved in the shipping sector. There hasn't been a huge amount recently. Of course, back in the day, I'm sort of going back sort of 10 or more years, there were a number of products in the market on the Islamic finance side with a number of shipping owners in this region. But that seems to have dried up more recently and is starting to come back. With green bonds and green Sukuk, we're seeing a lot more in sort of the renewable energy space than we are in the maritime space. The question really is, can that trend transition into shipping? So can a shipping company raise money in the bond market, for example, to put towards the purchase or financing of a new technology vessel? And that remains to be seen, although we are starting to see some private Sukuk products come into the shipping market. And in fact, one of those won Deal of the Year at the Islamic Finance Awards just last night. So it is something that's coming back into the market and that people are looking at as a new innovative product. So it remains to be seen on what the future uptake is for that. And I'm 20 seconds over, so I'm going to walk away before I get...
Thank you so much, Mike.